The following is a presentation of TFNN. The Bull Bear Nadex Options Hour. Brought to you by Nadex. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Bull Bear Nadex Options Hour. Now, Tom and Tommy O'Brien.
Good morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN headquarters in St. Petersburg, Florida. Tom's going to join us right after the first break. Right now, we got markets in positive territory. Dow Jones positive by 35 points, or about 1/10%. You have S&Ps positive by 12, or about 4/10%. And Nasdaq leading the way in positive territory, up 64 points, or about 0.8%. Jumping off, as I just did in the 10 a.m. update, taking a look at the S&P contract. Quite a sell-off yesterday, of course. The Fed comes out with the expected rate hike at 2 o'clock. The first thrust upward in the S&Ps from about 29.27 up to a high of about 29.36, and then quite a sell-off. You're talking about almost a full percent from 2 p.m. Eastern time till 4. We spiked down to 29.07. S&Ps, though, now up 11 points from that level. In terms of volatility premium in this market, the VIX, a little bit of an acceleration yesterday, still relatively low when you look at a 1% decline in the S&P. You have the VIX spiking to 1313, and on the heels of a little bit of a rise on the opening bell this morning, you've got that VIX contract trading at 1240. Jumping over to the Nadex platform, taking a look at some of the commodities, quite a sell-off. And really, we'll start it off with crude, but gold contract, quite a sell-off for sure. Yesterday, we had the EIA number in crude, and we're jumping around. There is, let me get yesterday. There is Wednesday, and there is your 1030 volatility for the EIA contract. You had oil trading at about 71.75 coming into that number, and quite a run, even through overnight, making highs at about 4 a.m. Eastern time. Oil trading at 72.55, and then quite a pullback. You have oil trading under $72, 71.93. But really, check out the gold contract. Overnight, and even backing it up to yesterday, we were at highs of about 12.04. And again, 1 a.m. Eastern time, we're up there at about 12.02. Gold now $14 off that level, trading at 11.89. And to put that, I'm just going to close out that Bitcoin contract, trading at about 6,500, because of course, what you always have to take a look at, we're jumping into the Euro-US dollar. And as we take a look at some of the currencies, we'll get that chart up. You have Euro-US dollar trading just under 117, 116.94. And as the euro is pulling back, you're seeing dollar strength. And of course, when you're looking at gold priced in dollars, dollar strength, that's putting on some weakness in that gold contract for sure. In terms of fundamentally, what's making headlines this morning across the market, final reading on the second quarter GDP confirming that 4.2% gain, the fastest rise in nearly 4 years. Quite a number. The performance was the best since the third quarter of 2011 in boosting by spending and investment increases. And to read a little bit more, you have GDP, the broadest measure of how the economy is progressing, 4.2%, pretty much in line with expectations. What else you have happening? Not the news that Snapchat wants to see out there as they continue to struggle, that Facebook and Messenger Stories hit 300 million daily active users. Pretty tough to compete with a platform like Facebook when they have billions of users to kind of funnel those users to a variety of their products. The rival Snapchat reporting only 188 million. Pretty remarkable. You can use the term only for 188 million. But to take a look at Snapchat, let's check out how they are trading this morning. Pulling back a bit on that news, Snapchat trading at 892, down almost 0.8%, and they continue to struggle. Even putting this on a little bit of a longer-term chart, checking it out on a daily, that is a tough chart. Going public at around the 14 mark, spiked to $21 in February, and from there, they have lost more than half of their value, trading at $8.94 currently. What else you have happening? Amazon getting some upgrades. We'll keep it on a daily chart to see the progression they have had. Quite a remarkable number. You get Amazon up $29 so far today, a solid 1.5%. Pretty remarkable when you talk about a company that's only almost worth $1 trillion. I believe the price point for $1 trillion on Amazon is $2,050.37. Pretty remarkable. We make that number on September 4th by 13 pennies and proceed to trade down about $120 over the next 2 days. But guess what? Did not take long. You get Amazon trading back above $2,000, $2,005, the high being about $45 above where we're trading at. We have the Nasdaq up almost 0.8% on today. Jumping around to some of the other tech stocks, you got Microsoft. Let's get it back into a 5-minute chart here. Microsoft up about 0.5% there. We covered Amazon. Taking a look at Google, up 1.3%. Netflix up 0.2%. Quite a number for sure. And jumping back to the Nadex platform real quick, and even on the news, because what else is happening, and it's happening right now, is you have, of course, we got the headline, do we? Well, you have, of course, Brett Kavanaugh, potential Supreme Court nominee, and his accuser Christine Ford, both testifying 10 a.m. this morning, going on right now. Not sure that's going to have any impact on the market, as it should not, but of course, news for the day for sure. Jumping back to the TD Ameritrade Think or Swim platform, jumping around to some of the other stocks. GE's been the headlines recently, struggling a bit, making a low on the open yesterday of 11.21, up about 0.6% today. You got GE currently trading at 11.46. And to give a teaser, we'll jump back to that Nadex platform. So we got oil EIA numbers yesterday at 10:30 a.m. Eastern Time. Thursdays, we get the natural gas number. Let's break out that natural gas contract. We're going into commodity spreads, natural gas. I'm going to start it off, take a look at the dailies. You have natural gas trading above $3. Quite a run, even from this morning. Again, these are 5-minute bars we're looking at, and you were trading at 7 a.m., about 296. Natural gas now trading at 301.75. And to even drill it down further, taking a look at the 12s, just trying to see what kind of volatility premium you have in this market. Natural gas trading at a penny above $3. You got volatility premium on both sides, but as you can see, very little volatility premium in a market that's expecting that EIA number coming any minute, and we'll see how that shakes out. In terms of bullish side, contract trading at 301.5. You can get yourself a defined risk option to the upside from 3 to 320 for 3022, essentially paying $7 in premium. You got $15 of intrinsic value as part of this 22, and you have the 7 in the premium. That's the defined risk until noon. And if you wanted to set up a volatility trade for exposure on the negative side as well, there's your 2 contracts. You're looking at $30, or representing about 3 pennies of movement away from $3. Not bad, especially if you have a bullish bias in this market, as you have about a penny and a half or $15 head start on that side. What else we got for headlines? Talking about AMD and Nvidia, that Trump's tariffs on Chinese goods could possibly be affecting some of the gaming graphics charts. To jump over to those 2 charts to see how that's shaken up, you got AMD down about 1.6% today, and I believe we had another headline as well on AMD. Not that one. Where are we? There we go, getting a downgrade. Analyst downgrades AMD shares, saying its soaring stock now reflects irrational expectations. And to pull back, to get a little glimpse of what they're talking about, get that number up there. A lot going on in the market. It's been quite a run for AMD for sure, but down about 1.5% today. We'll get that chart up. There's your number. Quite a number. $9 in April, up to 31 currently. Stay tuned, folks. I'll be coming back with Tom right after this break. We'll get into those natural gas numbers.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Hi, folks. This is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow Industrials right now up 65. We got the Nasdaq up 64. S&P's up 12. Gold contract down $9.30 at $11.89. You get silver down 12 cents, $14.28. Light sweet crude up 35 cents, $71.92 a barrel. Notes and bonds flat. 10-year 118.24, 30 at 140.16. King dollar's got a bid that's up 502 ticks. 94.275. The euro is at 116.93 to $1 US. Yen is out here at 113 to $1 US. And guess what? It's 10 o'clock. We'll see if we got any trading going on, because at 10 o'clock today, this is like going back to the O.J. Simpson, going back to everything else.
Say Anita Hill, right?
Well, what I mean is the amount of traders that are probably just watching TV versus out there.
Sure.
But guess what? We are going to the trader.
Okay.
And Mr. Ben Lichtenstein of TD Ameritrade Network. Ben Lichtenstein, what's going on, brother?
Good morning, gentlemen. Thanks for having me on.
Good morning.
Absolutely. Well, you know, there's no doubt. We know that markets move every single day. It's going to be really intriguing. You know, when we come up to the Fed, Ben, you know, things slow down. It's going to be intriguing today that, like, how many people are just watching TV, including trading desks, right? You know, it's like, okay. And I just heard a statistic which actually blew my mind, because I didn't remember this. A guy was just on Bloomberg saying that when the verdict came out at O.J. Simpson, that who's the, oh my God, Tudor Jones, Paul Tudor Jones, went wrecking in the currency market because he could, because he's such a big operator.
I was in high school at the time. I was in school, and I even found a TV. I don't know how it happened, man. There weren't many TVs around my high school, but I agree. Yeah, pretty
wild. So we had the Fed come out yesterday, What are you thinking of these markets, Ben?
A little bit all over the place. I mean, in some ways, the indices, at least, I mean, if you want to just kind of start there, have been somewhat mixed. You know, we're seeing a lot of strength in the Nasdaq today.
Yeah.
It was interesting. The Dow was the only one that was able to break out a range to the downside in the overnight or earlier this morning. We saw some weakness there. It took out yesterday's lows, but I'm able to follow through. And, you know, I think they're really just getting a boost right now in stocks from the very optimistic and, you know, for the most part, very strong words related to the economy from Jerome Powell yesterday. And, you know, everybody knew that the rate hike was in place, and I think most figured another one here to come in this year in December. And basically he sort of echoed, you know, comments from earlier about a very strong economic situation, tight labor market.
Yes.
You know, definitely pointed in the direction of some concerns associated with higher oil and tariffs, but noted as of now, for the most part, kind of limited as far as impact on the market. And it was interesting to hear him use words like transitory when describing, you know, crude oil prices on the rise. So certainly an interesting session. It seemed like he was a little bit less scripted at times, you know, a little bit more just kind of talking on a very personal level.
Yeah.
And in addition to that, I thought I heard him stutter or kind of skip a bit of a beat when asked about asset prices. He was a little hesitant to say, you know, that they're up at the upper extreme. I think there were visions or fears or flashbacks of irrational exuberance comments.
Sure.
You know, and the sell-off that we saw in reaction to that. I mean, obviously, as every word is watched, and but definitely a little bit less scripted yesterday, it seemed like.
Yeah. You know what's going to be intriguing is that, you know, like yesterday, you know, the bottom line is that you had the Dow up, it gave it up on price. The small caps, though, they were selling those small caps down. It's like, okay, so what's that all about? That's going to be intriguing watching that. And what does happen, folks, is that the Russell, you know, can get really volatile. There's no doubt about that. And the closing prices in the Russell, it seems that they can throw a huge amount of volume at that close every day. But, you know, that thing came down with some real juice. And then, you know, we'll see where this baby shakes out, I guess. The aspect of the rate hikes, I mean, the market just shook it off. Well, you know what's intriguing, Ben, is that even when the notes and bonds, you know, they're flat this morning, but they basically caught a small bid. I mean, they certainly didn't do what you'd think they'd do on a fundamental basis with the Fed saying, hey, we're going to continue to go up in 2019, you know?
Yeah, I think leading into this meeting, I saw a stat, something along the lines of fifth meeting of the year. So yesterday would have been the sixth, I guess it was. But basically they were saying that I think it was something crazy, like 4 out of those 5, the dollar had actually closed lower and the bonds had actually rallied. So, yeah, kind of an unusual reaction to what you would expect to see, again, considering that they've been so clear and transparent in terms of their message. And, you know, it's interesting, though, in terms of the strength in the dollar today, you know, it's been a bit of a head-scratcher. A lot of people are looking at it and going, okay, well, you've got bonds, you know, that aren't necessarily supporting and lifting the dollar. Rate, similar situation, which hasn't really provided that lift for the dollar, even though it should because rates are on highs. But I'm looking at some of the other foreign currencies, guys, that the weakness there that's really lifting the dollar. I mean, you've got a Canadian dollar, which continues to sell off. Recent highs, I think it's on its like 4th or 5th day in a row to the downside now as NAFTA talks have broken down, and basically it doesn't look like there's going to be a deal before the September 30th deadline. And then you've got a situation with the Swiss franc coming off, the yen coming off. I mean, these are some, you know, big moves here that we're seeing in the currencies, and definitely it's starting to lift the dollar a little bit. It's odd, again, you know, after what was it, you know, a week or two ago when we saw those new highs in the 30-year and the 5-year. In the yields, you know, the dollar didn't even really respond, and if anything, it was coming off a little bit. So I'm more focused on some of the foreign currencies in terms of influencing the dollar right now, but certainly Fed comments seem to provide a little bit of a bid there as well.
No, I can see that in a big way because the divergence is pretty intense, meaning that, you know, it's like, okay, who's right, meaning what, you know, structure is right. Are the bonds right? Saying, okay, you know,
who's in control, right?
Yeah, right. Do you know what I mean? And, you know, when you look at it on, I would say, a long-term basis or a fundamental basis, the market is, you know, the people with market participants normally would say that, hey, listen, the bond market is 10 times larger than all the equity markets, easy. And people are always looking at the bond market because they seem to be brighter than the rest of the market. And you know, it's kind of like, Ben, it's like the futures, the option market the option market makers, that's why people like options, they can seem to get the equilibrium better, So I guess we're going to find that out if, in fact, that's the case. My take is that it's still going to be the case because that's where all the big money is, and that's where people are saying, okay, and I think their risk parameter is much smaller when you're trading bonds than people trading equities, But we'll find out.
I mean, and real quick, I know you guys got to go, but if you take a look at, I always say, guys, price is king. Look at the bonds. New 2018 lows recently, and we're seeing that in the shorter stuff as well, the 2s and the 5s. So definitely something to watch there.
No doubt. Listen, folks, every trading day right here, 11 to 12 Eastern Standard Time, fast market. Check it out. You can check Ben out at 8 o'clock in the morning.
Yes, 7 a.m. Central, right? 8 a.m., right in the TD Ameritrade platform. Beautiful platform. We're always rocking it here, pulling it up on TFNN as well.
Big time. Ben, you have a great one, safe one. We look forward to the program in 45 minutes.
You guys, thanks so much. Appreciate it.
You as well, Ben. Thanks, man.
Have a great one. Have a safe one. Market-wise out here, folks, we get the Dow up 74, Nasdaq's up 63. Nasdaq's got a real bid there.
It sure does, man.
You get Apple.
Amazon's up big time today.
Is it
as well.
too? Yeah, look at Apple. Apple's up 489.
Yeah,
we go take a look at Amazon.
Back above $2,000.
Amazon's up 30 bucks.
Needs 2050 is the high for Amazon. That's the $1 trillion mark. Maybe we'll get it today.
Oh,
we'll see.
baby. Stay right there, folks. Tommy and I come right back.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated folic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
Monday, September 24th, TFNN is launching a new updated version of our website. You can still visit us at the same TFNN.com URL, and starting Monday, you'll be able to experience the new and improved TFNN website. If you're a current subscriber, don't worry, your subscription will be automatically transferred. The new TFNN.com will allow much easier access to all your account and subscription information. Get ready for the new TFNN.com, educating investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow Industrials up 92. You get the Nasdaq up 62. S&P's up 14. And natural gas.
We got it. So I just saw rising 46 billion cubic feet for the week. We'll get the expectation in a moment, but nonetheless, natural gas rocking
Look at that
and
move.
rolling. So I took a quick peek. Unfortunately, we didn't get a chance to cover it last time. Great conversation with Ben, though.
Yeah.
But I did take a quick peek at these contracts coming in at about 10.10, and I believe I looked at, so $3 was the price these are going to line up on the Nadex platform.
It was.
You would have had a bullish bias in that it was trading at about 3.015, so you had a penny and a half head start. And what's really intriguing, now you could have made both sides of the trade for about $30.
Okay.
The bullish side of the trade was costing you about $22. You were able to get in there at 3.022. Which was going to be $15 of intrinsic value, $7 of premium, the $7 literally representing 0.7 of a penny of premium, and quite an acceleration, right? That contract right now, just the bullish side, you'd be able to sell out for about $60. You make both sides of that trade, you make 100%. If you were just making a bullish trade, you're making almost 200% because you're getting in at 22. And to get back, maybe we can drill down. Can we pull up the news to see what... Natural gas, the expectation, where are we? There we go, all the way. Of course it's on the bottom, because that's where the winners are. Right?
You got it.
We get to that news. So there we go. So expectation was a rise of 61 billion cubic feet. Ooh. So we only got 46.
That means the stockpiles, stockpiles were already light, I believe, meaning that getting ready for the winter. So that means it's going to get lighter, right?
So they rose to 2.77 trillion. I didn't get a chance to listen to Jason Paff's program this morning. I'm sure he may have referenced with natural gas coming up. Does a great job. Quick plug for him. Front page of TFNN, Quantitative Edge. He just put out a new update as well. Comes out with an update every Monday. But one of the things he covers, of course, is that natural gas market. Yeah, so 306. I mean, quite a number, man. We haven't seen a 6-penny pop in natural gas on the news in a little while because if people follow the program, we're always taking a look at those numbers. There's very little volatility premium usually in this market because it does not move like oil usually does, which oil rocks and rolls on those EIAs. But nonetheless, a little bit less natural gas than they thought. Stockpiles at 2.77 trillion, and to put this on,
that's all it's going to take is one cold spell.
Yeah, and to put it on, I mean, this is where, so I just put it on hourly, and quite a number, right?
Is that all just today?
So last night? This was Wednesday.
Okay.
So this is like 24 hours.
24 hours. Was that this 24 hours ago? Then it went all the way down to what, the 297?
Yeah, about 296. So we went from 306 down to 296, and guess what? Back up. We're right there. And to put it on a daily, just for a little bit more. Okay, this is only going for the November contract back. That's what happens. We can pull up the continuous maybe, but to drill it back down to a 5-minute and get that action. There you go. So pulling back a bit now, even 304.81. That's why if you are making these volatility trades, you want to be fast with those fingers because you can already see this bar spiked up to 306.61. We're now almost 2 pennies from the high, and the whole trade was going to cost us just 3 pennies.
Wow.
For two sides of it.
Big number.
Big number.
So let's go into some of the higher volatilities trades, high volume stocks, and you're going to see. At the, not at the very top, you get Giron.
What's going on there? Plunges 76%. Says J&J. I see J&J ends some kind of partnership.
Yeah, this stock here, folks.
Biopharma.
Yeah, and this stock here, in 1998 or 99, I remember this stock so well. And the reason is that they had claimed that they had a cure for cancer.
Okay.
Okay? And... we'll show you. It's falling apart now, which I don't know what the news is. They fell apart. But wait till you see something here, because I remember this so well. Let me see. There it is. Okay, so
99.
Yeah. So
into the early 2000s was the collapse.
This was one of the internet was. That's when the internet, the .com was going crazy, and the biotechs were too.
Sure.
But this equity here, the good news is that. Their research is real. It wasn't like Theros.
Theros.
It wasn't like that. But what did happen is this.
It wasn't a scam.
Right. What happened is that they had one of the first breakthroughs that they thought they could cure cancer.
Yes.
And the stock exploded. And there was good stories about it. And then all of a sudden, there was a story that, I guess it doesn't work.
And we've seen it in the biopharmas. It's not a scam, right? It's just early stage progress that needs further studies.
Right.
Unfortunately, what happens is in the further studies, it's not confirming what they hope it confirms.
Right.
And that's why they have those further studies, because they get a tease on the first one as in a slight indication that might lead to something.
Yeah.
And then they have to do more thorough testing.
And look at this still. Okay, so this is still a really speculative stock. Wow. Look at that. That's 47,000 they only take in.
No, million. Were you?
Oh.
Yeah. Somehow they have a three. This is where I think we should go into the news for the amount we're talking about this, because they have $40 million projected in the next quarter.
And that's what they must have just lost out on.
Yeah, and I'm assuming they had some type of a deal with Johnson & Johnson in place.
Yeah.
Maybe we can go into the news, and that probably fell apart. And so that's where, so J&J ends the partnership that ignited it. So shares plummeted on the news that Johnson & Johnson will end a licensing partnership and return rights to the biotech company's sole product.
Yeah, I see. The move wiped out 50.
In market cap, but which is all predicated, I'm guessing, on that $46 million next quarter.
Yeah. Wow.
Yeah.
That's intense. Bed Bath & Beyond. Now, look at this one. You know, bottom line is that they have problems. And, you know, you get another big box store. Just,
oh, boy.
Yep. Down $4.20. This is blowing out the low of 2009, which is pretty intense. If you blow that out, 2008, that was $16.20. So that's saying, hey, the next step down here is $11.
And realistically, when I look at something like this, I think more fundamentally in terms of what does that company exist for? Do they serve a purpose in the retail environment that we have in 2018? And the market's saying no.
Right. And watch this. Watch this when you put this up. When you put this up, folks, they have zero presence on the net on their bigger material issues. Because watch this. A lot of the retailers have come off the lows, and I'll just show you, like Williams-Sonoma, right?
Yes.
But they get a brand, there's no doubt.
Yeah.
But what you're going to see that even when you put the revenue up, now they've just started, but they got a little e-commerce. You know, they get 5% over 3 years. Do you know what I mean?
For growth, I mean, you say little. They're taking almost $3 billion.
Right.
Yeah,
right. But
it's actually more than their retail.
Yeah.
Just that's a big number, man.
It is.
For 2018, they're only going to take in 5.3, and they're going to do e-commerce 2.8.
Yeah. And Bed
versus
Bath.
Best Bath.
And I guess
Bed Bath & Beyond,
And they're in big trouble, man. You know, and they're paying monster rents. They're in the they're like a, you know,
Bed Bath & Beyond,
Well, their stores are so big.
They are.
And then, have you ever gone to Bed Bath & Beyond without using a coupon?
I'm sure I have.
Yeah, I have too, but most of the time I always get those 20% off coupons.
Yeah.
You know, so because they come so often at your house.
I mean, the tough part is that they don't have a superior brand, right? They just kind of offer everything, which is what
they don't have a brand.
That's which is what Amazon does. Versus a Williams-Sonoma, they have their own aura, they have their own reputation. And that's
it's a good one.
Yes, it is. Right. It's a premium brand versus Bed Bath & Beyond, which is kind of the offerer of all things. But guess what? Amazon is now the offerer of all things of all things.
Yeah. Stay right there, folks. Tommy and I are coming right back. We got our man, Mr. Jack Gleason from Major League Trading. We have the Dow Industrials right now up 114, Nasdaq up 63, S&P's up 15. Jack, Tommy, and I will come right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. We have the Dow Industrials right now trading up 122. We get the Nasdaq up 63. S&Ps are up 15.5. Let's go over to our man, Mr. Jack Leeson, as we do each and every Thursday at 40 past the hour. Jack, you can check out Jack every trading day at majorleague.trading.com. You are also going to be hearing Jack coming from beautiful Costa Rica in about 6 weeks. We're going to get him live on a surfboard trading the future market. You gotta
look forward to that, Beck.
That's right, man.
The screen from the GoPro, just bringing out the ocean with me.
That's right, and you can have those fib numbers all laid out right over the ocean. Hey, this is a wild story. True story. Just when I was learning Fibonacci, right? We were always in the water a lot in the summer. Do you know what I mean? And I was looking at the waves, how the waves hit, each wave coming in. And I'm saying to myself, man, this is really interesting. When one wave hits another, hits the shore and then comes back on the other side. And I was always looking and says, okay, is that a 0.382? Is that a 618? And with that, and this is one of the keys to it that I really got out of it. It had to do with the velocity of the wave coming into the shore, going back out of the shore, and that to me now is cause. You know what I mean? Like, many times we know that you can go to a 0.382, 50, 618, but then it really matters to me at least. How do you get there? Do you know what I mean? Do you get there with force? Do you get there just about making it? So it's funny because when I was just bringing that up, I was thinking of us down the Cape.
Sure.
At literally in the water.
Definitely.
Isn't that?
Absolutely. I mean, it's funny how you once you understand the sequences, you can see it. I mean, there's you Google the image Fibonacci pigeons. It's 0.23, 0.38. It is really cool. I mean,
it is. It's the one thing of how you can talk about whether it's in the market, right?
Right.
Fibonacci is definitely part of life in some capacity.
Totally. And then
the human relations in terms of the arms to your body to your and just in terms of where it comes from in terms of Fibonacci sequence, right? You're taking the previous number, dividing it, so it's not just like a thing. It's a math.
Sacred geometry.
That's sacred geometry. That's right.
my kind of, so Renaissance Technology, we've never heard of it, guy, Jim Simmons, basically
Yes.
the most, successful hedge fund of all time. The guy talks all the time about geometry. Nobody knows what they do, but it's all mathematical.
Yes.
And he talks a lot about geometry. I have a hunch and a feeling that they use, I don't know what their formula is, obviously, or I'd be a very wealthy man, but some sort of Fibonacci sequences. And I actually think that, some of what they do is probably some of the footprints I see in the market, because, I'm not the one stopping the market to the tick, but who knows?
I agree. Well, what always blows my mind is that even when I'm pulling up stocks or stocks that I'm dealing with in the metals market, I watch him. He comes in these small metal stocks too. It's
Sure.
like, wow, man, what is
We've
Renaissance?
pulled them up many times. I
You do.
remember,
And
yeah.
what is he coming in here for? But guess what? He's in these. He's
Coming in there, make some money. maybe.
Exactly, man.
Well, it's all math based, so he's
Right.
got no opinion on the fundamentals. So if whatever sequence their computers see, right?
Yes.
They're just buying and selling without bias.
Yes.
We gotta love it. So
But, yeah.
we're gonna start. We got. I think we get the Swiss franc up here first, right?
I think I have the S&P.
So
the S&P. Let's go with the S&P first.
Okay, I threw a couple of curveballs in here just because I know we haven't talked a lot of currencies, but S&Ps, what I'm looking at here, this is not the continuous contract, which typically the continuous contract's the one I display. However, we had a recent rollover, which resets the charts a little bit. ES-Z8 December contract, we got the 50% retracement from the September 7th low to trade here, and that was at that 21.908 quarter, and we've basically ripped off there. Now what we're running into right now, 29.27 quarter,
Yes.
is actually the full halfway back from the all-time high to low. So this is right about where I would anticipate us to have resistance for the day, but on the higher time frame profit targets, based on that swing low from the September 7th low to high, we're looking at 29.65 upside targets, and I really like the way it reacted. Now that we got that quarter point raise out of the way, you're really going to want to pay attention to where was the market trading before that raise was officially announced. I mean, it was like 100% certainty that they thought they were going to announce it. So I think we were trading right about where we are right now. We were like right around 29.28, 29.27 before that announcement of the quarter point raise. So if we can clear and stay above this, that's going to be a big level going forward. The market doesn't care about the interest rate raise. Full steam ahead. Amazon's a beast. So
Yeah,
that's what I
right.
got.
The market doesn't care about anything, man.
They should with Amazon. They're taking over the world, man. We were just talking about Bed Bath & Beyond last segment, Jack, and they're in big trouble. Of course they are, man, because they sell very traditional, pretty standard products, and that's the industry Amazon has crushed already. Yeah.
Right.
Yeah, it's amazing. Every time I see that stock, it's like I don't even care to own it. I just like watching it, Like
Yeah.
I'm not missing out on anything. I mean, I trade, so the only company I own is the one my dad works for.
There we go.
So,
And it is tough.
just to support him.
As you say, and $1 trillion is tough because they have some serious PE multiples priced into that stock
yeah.
already. So they better be firing
Well,
on.
we all give them plenty of business, I bet.
We do.
That's-
We do.
the way I figured, that's how we make out. I mean,
Absolutely. I tell you what, I buy a lot of stuff off Amazon. I mean, working from home, I don't gotta go anywhere really.
Right,
I can order my food online, all my electronics.
They're going to have Whole Foods steaks and pasta and fresh produce that's going to be
Where you
delivered.
are. I
Is it
know.
in Tampa?
Life's-
Okay.
life's-
They rolled it out, yeah.
It's too convenient. Life's too convenient.
Gotta love it.
All right, let's go to Swiss franc real quick.
Perfect. We got it up.
So, we're seeing a lot of dollar strength here, which obviously has led to gold weakness. So that's why I decided to bring in this. First of all, USD CHF and then the USD JPY. We did just come into and then out of that quarter point raise. So the dollar's getting stronger. So you have that fundamental reason why, the dollar could rally, whatever. The whole full halfway back from the low of 2018 here. Can't believe we're almost at 2019. That traded just this last week. Nice clean rally out of that. So if we continue, number one, just back to those highs, you got potentially a really good opportunity for a swing in a currency, which I love swinging currencies just because there's a ton of volatility, there's a ton of movement. And when those trends begin, sometimes it's weekly bar after weekly bar. It's like you just trail those weekly bars, so you catch a good trend. So I wanted to bring that. The target would be 1.027.
Okay.
Negative 23% profit target completion. And then the USD JPY has already actually traded the halfway back for the year, completed profit targets, then traded the next one, and we're looking to break out of what is basically the high of the year right now. You can see you could draw a trend line sloping down that we're really cracking here. So I'm looking for the USD JPY to be one of my consistent themes. Using Nadex, just looking for good areas to buy pullbacks and for us to close above them. And there's a Nadex, and I know sometimes I don't talk enough about the strikes and stuff. This is a Nadex bull bear hour, but there's strikes every 20 pips. So if you get a pullback for 40 pips on the day off the high, and I go expiration, that's what I got. See my time's getting cut.
It's huge. Listen, folks, you can check out Jack at MajorLeagueTrading.com. Jack, you have a great week, safe week. We look forward to speaking to you next Thursday.
Thanks. Take care, guys.
You too. Thanks, Jack.
Stay right there, folks. Tommy and I are coming right back.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-Share Bull and Bear ETFs. China A-Shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools, as well as provide great market calls too. Sign up today.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow right now is up 98, Nasdaq's up 67, S&Ps are up 15, and this is going to be interesting, folks. I want to dig into this more, but regulation-wise, the SEC, what they're thinking of doing is getting rid of the rule right now. In the ETF structures, the ETF sponsor has to update their net asset value every 15 seconds.
Okay.
Okay? And we talk about this a lot on the
Yes.
air because what ends up happening is that you want to know what the net asset value is, so whether you're overpaying or underpaying.
Sure.
Okay? Well, bottom line is that if they get rid of that, it's going to be, to me, it's going to be insane, because what would end up happening is if you're Renaissance, or if we're like a big player, and they're going to have that computer model
Sure.
in a second.
Yes.
Okay? So what you're going to see, folks, and you should check this out yourself, what you're going to see is a divergence inside the market, and a regular retail person would not know, as they're buying that ETF, do you buying it over net asset value or under net asset value?
Sure.
You know, during that time of the day. You know, so there it is right there.
Yeah.
Yeah.
So let's see what they're talking about. So, of course, Wall Street's backing it.
Oh, look at that. Yeah.
So the SEC wants to abolish the practice of ETFs updating their net asset value every 15 seconds. Something it says is cumbersome and often inaccurate. Yeah.
It's pretty amazing.
And that's where, you know, when that deviates, as we've talked about, it's a red flag in a dramatic fashion.
Right. And the arbitrage opportunities are huge.
Yes, exactly.
Yeah, you know,
exactly.
It's a big number. So.
Yeah. The SEC has proposed letting funds report their value once a day at the close of trading, as opposed to every 15 seconds.
What a field that
Quite a discrepancy in terms of that.
Yeah. You better read through that one, folks. Stay right there, folks. We get Fast Market coming up next. Then we get our man, Mr. Basil Chapman, Steve Rhodes, Dave White. I'll be back this afternoon. Thanks, pal.
Thanks, man.
Wow! Go get him, folks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.